Okay, on the screen right now, you see a chart of TLT, an ETF tracking long-dated U.S. Treasury bonds. It's a weekly chart. You can see that in the top left. The chart is from TradingView.com. What I wanted to highlight here is an AB equals CD pattern that is currently apparent on the chart and might be an interesting trading opportunity. So basically what we see is we have a run up to here in January 2015. That is the high that we're seeing right around 138. So we use that as point A. Then we come to a swing low right around 114. That was in early July of this year. Then we recently came back up to point C, which appears to be another swing high. That is at 129. Now, a couple things to note is we clearly have a pattern of lower highs in place, right? So here is point A. This isn't a point in ABCD terms, but also in late March, we saw a high, another swing high, and then this third swing high. So each swing high is successively lower. So that's often indicative of a downtrend, a pattern of lower highs, which suggests that this is in fact the top. It also suggests that rallies can be shorted, which is sort of where we're at. So if we have A to B, and then we have a 61.8 retracement. Point C right here, you can see, is pretty much exactly a 61.8 retracement from the move down from point A to point B. If we project that forward, if we go to 1.68 of the move, 1.61, excuse me, of the move down from B to C, that gives us a target of around 106. So, there are a couple ways to play this. You could try to speculate on a retest of support here, and that's probably the way I would. I don't think I will trade this. I'm focused on other opportunities now, but if I was trading this, I'd probably look to short somewhere around here, 123.50, somewhere around that. A more patient trader, or another way of looking at it, is to hold on to a move to test this trend line, right? So that gives you 126, something like that. Ideally, you want to be as close to point C as possible. But the good news here is that, if 106 is your target, even if you enter here at 120, you put your stop at 130, you're still getting a 1.5 to 1 reward risk. And if you're a little more conservative, 128, now you're talking 2 to 1. 127, 2 to 1 type of thing. So there are lots of opportunities here. Like I said, if you enter at 123, put your stop at 128. That's probably what I do. You're risking, 5 points there to target 106. So what's that? 17, right? Risking 5 to get 17. That's a 3 to 1, 3.4 to 1 reward risk. Pretty solid trade on TLT. And that's the basic setup that I wanted to highlight. I thought that was an interesting pair. A different perspective. We focus on just one corner of the weekly chart, but if we look at the daily chart, you can see it also here. And then you can sort of see, all right, maybe I want to speculate on a test of 123, 134, 126, something like that. But a pretty interesting opportunity. It also coincides with a lot of people who think that, now may be a major inflection point, and that the bull market the Treasuries have been in for the past several decades is finally coming to an end. Of course, a lot of people have called that. I myself made that mistake of thinking that was going to be the case several years ago. Clearly, Treasuries went higher. In either event, though, I think this is an interesting setup in that the reward risk is very favorable. So even if it doesn't work out, it's a good setup where in terms of your risking, not so much for a potentially larger reward. That's about it. Just want to discuss this trade. Anything you have to add, any points you want to share, join us at informedtrades.com. Of course, help us out. Like this video on YouTube, share it on Facebook, Google+. That helps us out quite a bit. Best of luck in your trading and investing. We'll see you next time. Take care.